Welcome back. Today, we are going to talk about a stock that has just gone completely parabolic, lighting up trading screens everywhere, SHFS. The move it just made is, well, it's pretty wild, and we're going to break down the technicals to see what's really going on under the hood, and it all starts with one single massive number. Just take a second to look at that. 226%? That's the kind of gain SHFS has seen in just 3 months. Now, whenever you see a move that big, that fast, you have to ask the big question. What in the world is driving this? And more importantly, can it actually last? All right, first up, let's get our bearings. We need to look at the timeline of this incredible rally to really appreciate the speed and the scale of what just happened here. I mean, the sheer velocity here is just staggering. The stock was already moving up nicely, but then on September 24th, it just went vertical. It more than doubled in a single trading session. And here's the kicker. It did so on insane volume, over 32 million shares traded hands. That's not just noise. That's a massive signal that a lot of people with a lot of money suddenly got very, very interested. Okay, so a move like that doesn't just happen out of nowhere, right? There's got to be a reason. So in this next part, we're going to dig into the technical indicators that the bulls are looking at, the signals that make the case that this powerful trend might actually have some legs. You know, the first and maybe most important bullish sign is that classic relationship between price and volume. This is textbook stuff. See, a price spike on low volume can be a fake out. But when you get a huge price move backed by monster volume like this, that's what traders call confirmation. It suggests there's real conviction, real money behind this trend. And this is where the bull case really gets its juice. It's not just one signal, it's a whole suite of them. All these different tools in the trader's toolbox, the MACD, the CCI, the Arun indicator, they're all basically screaming the same thing. They're telling us that the upward momentum here is powerful, it's confirmed, and it is in full swing. It's a technical consensus, for sure. Okay, but, and this is a big but, that's only one side of the story. A rocket launch is exciting, but we all know that what goes straight up that fast can come down just as hard. So now let's flip the coin and look at why the caution lights are flashing brightly. So before we dive into the warning signs, you gotta wrap your head around this one key term, overbought. And honestly, the best way to think about it is with a rubber band. You can stretch it and stretch it and stretch it some more. But the further you pull it, the more tension builds up and the higher the chance it's going to snap back hard and fast. That's exactly what these next indicators are worried about. And wow, these warning signs are just as unanimous as the bullish ones. The RSI and the money flow index are at extreme levels. I mean, look at that MFI, 99.5 out of 100. That is about as stretched as that rubber band can possibly get. And on top of that, the price is launched so far outside of its normal trading range, its Bollinger Bands, that it's practically in orbit. These signals are all blaring the same alarm. This thing could snap back at any moment. Now, this is where things get really fascinating. It's a tale of two charts. If you zoom in and look at the short-term picture, this stock is an absolute rocket, trading way, way above its recent averages. But if you zoom out and look at the long-term view, it's actually still below key benchmarks, like the 200-day moving average. So what that tells us is, as powerful as this recent surge has been, the stock is still technically in recovery mode, climbing out of a much deeper hole. So you've got this epic tug of war, right? You have incredible bullish momentum on one side and these extreme overbought warnings on the other. It's a total crossroads. The analysis lays out 4 pretty distinct scenarios for what could happen next. Now, to understand where we might be going, we need to know the map. Think of these price points as the lines on the battlefield. Above us, you've got resistance around $9.19. That's the ceiling the bulls have to smash through. Below us, the first line of defense, or support, is at $6.41, with a bigger safety net way down at $3.72. And right now, we're smack in the middle, on the front line. So here are the 4 potential paths forward. First, the bulls just keep on running, and we get a bullish continuation blasting right through that resistance. Second, the flip side. Those overbought warnings come true, and we see a sharp pullback as people start taking profits. Third, things could get choppy. We could see some volatile consolidation where the stock just bounces around sideways for a while, letting that stretched rubber band relax a bit. And finally, there's the risk of a gap down, where sellers just overwhelm the buyers right at the opening bell. So after all of that, what's the bottom line? Well, it all comes down to this one central conflict that every single trader has to deal with. How do you balance the incredible, undeniable power of momentum against the very real danger of risk? You know, I think this quote from the analysis just nails it. It says it all perfectly. You've got these two powerful opposing forces at play. On one hand, yeah, the stock shows extremely strong bullish momentum. You cannot ignore that. But on the other hand, the overbought conditions are basically screaming for extreme caution. This is the very definition of a high-risk, high-reward setup. And that leads us to the final practical takeaway here. Given the really high chance of a sharp, sudden reversal, the analysis makes it clear that risk management isn't just a good idea, it's absolutely crucial. This isn't about trying to perfectly predict the future, it's about being prepared for the volatility. Things like setting a stop loss or even taking a little profit off the table are just smart ways to play defense in a situation that's extreme. And so we'll leave you with this question because what's happening with SHFs is just such a powerful case study in market psychology. In a market that is full of extremes, when a stock is flying this high but the warning signs are flashing this brightly, how do you balance the incredible pull of momentum against the simple prudence of managing risk? It's a question worth thinking about.